Hi guys, in this podcast, we're going to be talking about risk management, a few things that you should consider to improve the outcome of your trading when it comes to risk managing your trades. Now, most of the people, they simply think of risk management as allocating like a portion of your account to a particular trade. A lot of people have been brainwashed that you should allocate like 1% of your account to like a particular trade. And there's just a lot of misguidance out there as far as, how to actually do it in a way that would grow your account. Because if you trade with $1,000 account, if you trade with a $10,000 account, you put 1% of your account, you can't even buy a single fucking option with that. So like automatically you hear those rules of 1% allocation from someone that runs like a multi-billion-dollar hedge fund. So their 1% could equate to millions of dollars that they're putting in a trade. And so you cannot use the principles that hedge funds are using and be allocating 1% if you're starting with a smaller size account. You will never grow your account. That's number one. So in this podcast, I'm going to offer a solution as far as what do you need to do to grow your account and how to progress when the account is actually growing. Number two is, if you study any greats, of all times, they have never, made wealth. Like, I'm talking about, $200-300 million or $1 billion. That kind of money was never made by putting 1% of your account into anything, So oftentimes, a trader would come in to sign up to trade with 13 market moves, and the first thing I have them do, or any other coach, here would have you do is, send a picture of your screen so we know exactly what you're working with. We'll make a plan of action and so on. But most of the guys send like a fucking, their list of positions that they have is longer than, an average shopping list, grocery shopping list for people. I mean, you cannot be holding 30 fucking positions, or you cannot even be holding 10 fucking positions and expect to make money as a trader. People that do that, they simply don't have the slightest fucking idea what they are doing. And that's for guys that have like a $20,000 account. They have 30 fucking positions. What the fuck are you doing? You will never make money like that. You will never. So out of 30 trades, each day you gotta, number one, you gotta follow 30 fucking trades every day. How are you doing it? How the fuck are you gonna focus on 30 trades at the same time? Which means you're going to misguide your entries, you're going to misguide your exits, you're going to miss a lot of shit that's going to be happening. There's no way a human being can successfully manage 30 fucking positions on a $20,000 account. So that's just a ticket to absolute nowhere. Your account will not grow. It's going to fluctuate. You got 30 positions in a $20,000 account. Your account may go up $200 in one day, it'll drop $800 in another day, and that shit is going to continue on and continue on and continue on forever until one day, the market's going to have a flash crash and you're going to go for 20K to fucking 2K anyways. So just I call it the slow death. You're not going to make any fucking money, but people do it for stupid reasons, again, because there's so much bad information out there on trading, and people will tell you, well, you should diversify. Diversify why? Why would you want to fucking diversify when you have a small fucking account? You get your account to at least 10 million, fucking diversify all you want. I mean, you get your account to at least, a few 100,000, like 500,000, then instead of maybe having 2 trades going, start having, maybe consider 4 trades. But you don't need to be putting 30 fucking trades on an account to where Oh, Leo, but I have 30 trades because I heard somewhere you should diversify. Well, that's fucking somebody that you've heard probably is managing a $60 billion fund, and they have completely different rules, and their money of 1% amounts to millions of dollars. So some hedge funds, 1% is like $1 billion. So like you can't be following that program. They're targeting different types of returns, like 6-7% is like amazing for them. So, you can't be using these conventional diversification techniques. You can't be using these rule allocation. Somebody may tell you, okay, well, instead of 1%, I'll do 1.5%. That's bullshit. So it doesn't matter. Okay, so you want to grow your account from nothing, like a small amount. You want to grow your account from 5-10K to $1 million plus. You got to forget about all this bullshit. Okay. You want to grow your account from $40,000 to a few $1,000,000. Forget about all this 1% rule, diversification crap. If you study the greatest, okay, who's the fucking, okay, let's just get down to the meat of this, okay? Who's the greatest fucking of all time? Warren Buffett, okay? Do you hear Warren Buffett ever saying like, well, I'll put 1% of Berkshire Hathaway in each stock? He doesn't do that. When this guy fucking sees a good value, he goes and he puts a shitload of money in each one of his trading ideas or investing ideas, okay? And he goes big. He goes big. When the moment is right for him, he goes fucking big. Okay, that's why he's got the big fucking money. Okay? He's not sitting there, oh, should I do it? Should I not do it? She's like, well, Munger, what do you think? Should we put like 10 billion in this fucker, or should we go 15 billion? He's not sitting there, hey, Charlie, what do you think? Should we go 1% here? And I mean, I don't know. I mean, they don't do this kind of shit. They go like, if you listen to Warren Buffett, he'll tell you all the money that Berkshire Hathaway has made is because he has nailed a few trades and he went big on those trades. Like, go research that stuff on your own, guys. I mean, anybody that has made a substantial amount of money, they don't do this bullshit diversification crap. Okay, they don't go and put 1% of a $10,000 trading account into a trade. Okay, and good luck. You want to follow that? Fuck it. I mean, you'll never make any money. You will never ever make any money. So now that we've covered what you shouldn't be doing, okay, the question is, okay, well, what are some of the things I should be doing to risk manage an account that's not at $1 million yet? Okay, well, what you should be doing is the way that just understand the root of risk management, okay, is designed so you can do what? So you don't lose a lot of money. Well, by definition, it's not designed so you could make a lot of money. It's just the risk management itself is so you wouldn't lose a lot of money. Okay, and yet an average person that trades, they associate not losing money. They're gonna go and they're gonna listen to a bunch of fucking videos on YouTube, which basically say, well, hey, you should set a stop loss at like 6-7%. Okay, and so I don't know what are these guys trading that are setting stop losses at 6-7%? Okay, maybe they're trading stocks, but they're not trading stock options. Okay, because I mean, you could be getting into a weekly options trade, and the difference by the time you enter your trade and by the time your order gets accepted, that by itself there could be 6-7%. And if you miss that and you're going to set on top of that a stop loss of 6-7%, you're going to be out of this trade before the trade even has a chance, okay, to make you money. So you certainly cannot be setting a stop loss of 6-7% when you're trading weekly options, because within minutes you'll be out of a trade that potentially can go 800%, okay? But you're gonna jump out of that fucking trade because you're trying to minimize your losses, Well, understand this. When you trade weekly options, okay, your positions, okay, they will be changing rapidly, okay, by more than 6-7%. Okay, if you trade weekly options on the top of stocks that we trade here at 30 Market Moves, okay, you will have your positions swing by as much as 70%, okay, before a trade could go 20x, which would be 2,000%, right? So you could be down 70% before a trade could go 2,000%. So if you're setting a stop loss at 7%, how the fuck will you ever see your trade go to 2,000%? Okay, because oftentimes when you will get into a trade, again, we're talking about trading weekly options, okay? Weekly options are highly volatile, so before the trade goes the way it is planned to go, the way we're calculating the trade to go, there are chances the trade will go in the red first. As a matter of fact, I'd say 80% of the trades will go in the red or some kind of extent. They don't all go 70% negative first before they make money, okay? And clearly there's a great number of trades we take and they go extremely green in the first few minutes or in the first couple of hours. And then there's going to be a moment where you could get a bounce or a reversal of some kind, and they temporarily could go red at that point. But expect your trade to go red almost immediately after you take it because of the type of instrument that we're trading. Weekly options are highly, highly volatile. So if you expect to just take a trade and for it to be green and then greener and greener and greener and greener, you're either brand new and or you just simply have complete wrong expectations what trading is about, okay? Or you simply don't have any fucking clue what the fuck you're doing, okay? So most of the trades at some point, you will see them red before they go exponentially green. And that is normal because the market does not stay in the same spot or it doesn't necessarily move in the same direction throughout the entire trading session. Okay, at some point you could go some sideways action, and so you may have even a good entry as far as the stock price, but if nothing happens for the first 2 hours after you get into a trade, options will begin to decay and you're going to show a loss. Now, it doesn't make you run on the trade. It just, things are not moving. Things are not moving. They're not moving. They're not moving until, boom, they're fucking moving. And now you're exponentially green. Now you're 500% green. But guess what? Until you got to that 500% green, you're seeing nothing is happening and options are decaying. And now you're minus 10%, you're minus 20%, you're minus 30%. And then, boom, you're like, oh, fuck, now I'm up 130%. I'm up 270%. I'm up 520% now. Okay, that kind of stuff will take place on daily basis. Again, if you expect to get into a trade and set on weekly options and set a stop loss of 6-7%, you will lose. So you're gonna get into a trade expecting it to go green, and there is a 99.99% probability that the trade first will go minus 6-7% or slightly more before it will go green. Okay? And the reason I say that, and there is a way to improve on that, so there's a greater importance of this message here. The way you would improve on that probability of your trade going almost instantly green, the only way you can risk manage that better is by improving your entries and exits, right? The reason the risk management is there because nobody can ever be 100% certain, okay, I'm going to take this trade and that's a fact, right? It's 100% guarantee it's going to go my way. Because oftentimes you could be right about the trade, but first it's going to go against you before it's going to go exactly the way you planned it. And it's just the nature of the market. So most of the people that set these limitations, well, I can't lose more than this, or I can't lose more than that, okay? It's because instead of focusing on better entries and exits, they're focusing, oh, well, what if I'm wrong? What if I'm wrong? What if I'm wrong? I can't lose more than this. I can't lose more than this. What if I'm wrong? And it's a fucked up mentality, okay? What you should be thinking as a trader, okay, opposed to what 99% of people are telling you out there, okay, you should be thinking, okay, what if I focus on perfecting my entry on this trade? See, it is the perfect entry on the trade that guarantees that almost immediately you will go green on your trade. Yet most of the people, they spend so little time focusing on the entry, and that is a result of that causes them to implement these bullshit risk management strategies, such as putting a stop loss at 6-7%, that in turn guarantees the failure of that very trader who thinks he's doing the right thing by setting a 6-7% stop loss. In weekly options, it guarantees the death of your account, the slow death. Because every time you will go set a 6-7% stop loss, unless your entry is perfect, you will jump out of the trade that potentially will make you a killing. And after you do that, trade after trade after trade after trade after trade, okay, you will call 13 market moves, because at one point you'll be like, you know what, fuck it, enough is enough, man. I'm using this stop loss trade. They don't fucking work on weekly options, okay? So, Leo, what are you saying? You should like not have a stop loss? You should have a mental stop loss, okay, that is tied to your entry, okay, and your exit strategy. So what I'm saying, instead of coming up with some fucking statistical bullshit number at which you should be setting a stop loss, okay, your stop loss should not be the same percentage every time. Your stop loss, okay, should be based on the chart. It should be based on a certain level, okay? If the stock gets to this level and it breaks this level, well, shit, I'm going to get out of this trade. If the stock gets to this level and I'm looking at divergences, I see a ton of bear divergences, what I am going to do, okay, my risk management at that point, okay, there is a 90% probability it's not going to break this level. Guess what I'm fucking going to do? I'm going to add to the position. That is my risk management strategy, okay? That is how you nail a 20xer, okay? So, for example, you're going to get into a trade. Let's say you're looking to short a stock at $200, okay? And you're like, okay, I think there's a good chance the stock is going to drop to 190, okay? So, in that case, what do? Well, you don't buy 190 strike puts. That's number one, okay? So you're probably like, well, Leo, if you think it's going to drop to 190, I should be buying 190 puts? No. How many fucking times guys, okay, the way you select the strike price, okay, is if your target price is 190, your strike price and your target price should not coincide. If you're looking at a $200 stock and you think it's going to drop to 190, you should be buying a strike price above your target price, okay? So you should be buying 197.5, 195, 192.5, okay, not 190. What you should be buying 190 strike price if your target price, let's say, is 180. So let's say it's like a earnings report, or you're expecting like a big momentum in the stock, or maybe it's a stock that just got this powerful trading range. It has a tendency to move by like 20 points recently. We had a lot of stocks, right, that increase in their daily movements, which is perfect when you trade weekly directional options. So if you got a stock that's capable of moving 20 points and you think, hey, 200 is the limit, let's say something's run up from $80 and now it trades at 200, you're like, hey, I think 200 is the top. I think today is going to be the day where the stock is going to, maybe there's going to be some profit taken, whatever the reasons, right? Like, just imagine this, that based off whatever that you're looking at, Okay, hopefully you're coming up with that based off a move sequence, based off a chart pattern, based off other things besides just blindly, oh, I think this shit's going to drop. Like, that's not a strategy, right? But whatever is that you're following, which hopefully, again, is tied to the charts, it's tied to the levels, it's tied to a 30 market move sequence. So something that you can quantify without emotions, right? Hopefully you're using something like that to make your trading decisions. Okay, so let's say based off that, you're like, okay, I can see the stock drop today from 200 to 180. In that instance, buying 190 strike put is justified because your target is 180. So by the time, here's your goal. By the time stock hits 180, you're going to be $10 in the money. So if all things being equal, even if it's the last day of expiration, it's a zero DT top situation, the intrinsic value of that option is going to be worth $10 no matter what the fuck happens. Okay, so that's how you're selecting the strike. So strike selection, okay, and better calculation of a strike price is a risk management on its own. Okay, so basically what I'm saying, instead of setting specific rules that are just irrelevant to a particular trade that you're taking, because every trade is going to have, different characteristics. You're going to be getting at different trades for a variety of different reasons. So why should you use the same fucking rule for every trade you take? Well, Leo, if the trade is down 7%, I'm out. Man, that's bullshit. That's fucking total bullshit. That's why your account ain't fucking growing. Okay, you cannot use same rule for every fucking trade. It's fucking ridiculous. And yet some people think it's, oh, Leo, it's risk management. No, it's not risk management. Okay, it's fucking suicide. Okay, why do you even fucking trade? It's bullshit. So your risk management should be in your entries. Okay, you should go with an idea, not of, oh, how much money I'm going to lose in this trade. Well, I got to protect myself. I got to set this 7% stop loss. But Leo, I'm only going to go with 1% of my $1,000 trading account, and then I'm going to set a 7% stop loss. Motherfucker, you're not even going to be able to take a trade if you've set all these fucking rules and regulations upon yourself. Fuck. So get rid of all this baggage, okay, and focus on the right shit. So just think of it this way. If you did nail your entry perfectly, if you really took more time to study the charts, the levels, the move sequence, and it helped you nail the entry, okay, how much time would you have to really worry about, well, Leo, is this a good trade? Is this going to work out? Is this whatever? No, you wouldn't be so fucking worried about shit going wrong because you would have a much higher level of confidence of why you're taking the trade in the first place. And if it helped you nail the perfect entry to where, like, okay, maybe momentarily the trade goes minus 10%, but like momentarily meaning like in the first 2-3 minutes. And then the trade starts going plus 40%, plus 70%, okay, plus 180%, 760%. By the time the trade goes to, plus 500% plus 700% plus, all of a sudden, right, that fear is gone that most of the traders face. Oh, Leo, I don't know. Is this a good trade? I don't know. Well, clearly now the trade is like 7x. Ain't nobody worried now. Okay, but that's the point you should be worried about, okay, your other part of the equation. Like, it's not just called entries, right? It's entries and exits. Like, at that point, you should know, okay, how much position you're going to be selling at 7x, how much position you're going to be selling at 13x, 21x, whatever. You should calculate all that shit ahead of time, and that is your risk management. You should determine all these things ahead of time. You should determine the level, a target price at which you will begin taking profits. At some point, you have to take profits. So And that's the moment normally where some traders get really comfortable. Hey, the trade is making a bunch of money. I'm fine. I was worried about this trade, Leo, but now I see it's a good trade. So when you get to that point of complacency in the trading day or throughout the trading week, like that's normally a good idea fucking to collect some profits. And then that takes me to a whole nother subject of psychology of trading, okay? To help you identify your weaknesses as a trader, acknowledge them, understand them, and when they arise during a trading session, understand, hey, that is my moment that I normally miss. That is the moment when I'm emotionally in such and such a state, I should be doing exactly the opposite of what those emotions are telling me to do. And so at that moment, you should add to the position, or you should take some off the position. So it's very important to understand your strengths and weaknesses as a trader. But again, that's a whole nother subject. But that's a part of risk management as well. So it's basically risk management should be focused on improving your entries, on improving your exits, okay? It should be focused on not a like one rule fits it all type thing for every fucking trade. And so another part of risk management is some of these psychological aspects. Another part of risk management is making sure you're going with the right strike, understanding how to calculate the strike prices. Because again, a wrong strike on a good trade, that's a loss. Okay? A good strike on a good trade is what gets you paid. And so there's market conditions, they change all the time. So your strike strategy should move sometimes from being in the money, at the money, near the money, to sometimes all we want to do is buy fucking out of the money, way out of the money, calls or puts. That's not your everyday top trading, but there's certain market conditions on which it is clear that there is a bigger moving process, and if you buy out of the money, that's going to pay exponentially higher than you buying in the money. And then of course there is the safest way to do it is you buy some options at the money, near the money. You buy some options way out of the money if you're expecting the move. So that's a part of risk management, okay? Selecting your strikes wisely, selecting, a part of the strategy could be when it comes to strike selection, also add a form of risk management as far as your expiration. Clearly, this week expiration is going to pay a lot more, okay? But if in your frame of calculation you think, well, this stock may jump by this much this week, but if there is any potential that it may not happen by Friday, but it will happen till Monday, what you do is you also buy next week expiration as a risk management to risk manage this position, this options position on this particular stock that you're trading. So let's say it hits a certain level this week, but it doesn't quite get you to a max payout. You still got some options going into next week, and if the move continues, you will really capitalize on next week. But most of the people, what do they want to do? Well, Leo, I don't know if the stock is going to do this or this week. I'm just going to go buy expirations. I'll just go buy 3 months out just to be safe. Yeah, that's exactly why you don't make any fucking money. That is why your account is not fucking growing. Okay, because understand somebody selling you an option that expires in 3 months, okay? They want to charge you a certain premium for it. And what most of the people that sell you options, okay, they got one thing in mind. They hope that in 3 months the shit doesn't go anywhere, okay? Because guess what? If the stock goes nowhere, they make money. The people that sell you the option, okay, they make money. If the stock doesn't do anything, so within the next 3 months, you're thinking you're buying a wiser thing because, well, Leo, it's going to drop by 50. Okay, I'm going to go buy 3 months and I got plenty of time, and you don't make any fucking money. Why? Because let's say the stock drops $50 3 weeks later. Well, those 3 months expirations, okay, by that point, they've decayed so much that, okay, you're I mean, you're not going to make any money, okay? The option has depreciated so much, and the person that sold you the option, they're not losing any money. You're losing the money. Now, the same scenarios, well, the stock drops $50 tomorrow. Well, the options that you've paid for that expire 3 months from now, okay, you're, number one, they had such a high premium that even if the stock dropped $50, you're not making but pennies on that, okay? You're certainly not making 5x. I mean, you'd be lucky if you're making, 20% return on something like that. And so what the fuck are you doing it for then? I mean, if the stock drops $50 and you're only making 20%, stock drops $50, I mean, at the very minimum, you should be making 5-10x trade if you've risk managed and properly selected your strike price with weekly options, right? So, and that is, of course, like, let's say we're trading a $400 stock that goes down by $50, something like that, right? We're not talking about a $50 stock dropping 50 to like nothing. The return on that would be a lot more because clearly options would be priced a lot less. So, guys, we can't cover absolutely everything in this message, but focus on the right things, and then you will have to focus less on conventional bullshit, which tells you, well, you should use the 6-7% stop loss rule. You should lose no more than this. You should do no more than that. You should never put more than 1% of your money in a trade, when Warren Buffett tells you exactly the opposite. And I'm just using Warren Buffett because, it's just undisputable champ of billion-dollar trades, right? But guys, I mean, like, if you want to grow a smaller size account, okay, let's get down to a specific example. Let's say your account is 30K. All right. And the number one thing, okay, that most of the people that come in to trade with 30 market moves, they're like, well, most of them like, okay, Leo, so let's take a couple of trades and just see how it goes. Well, that's a fucked up mentality to begin with, right? So you should come in, okay, let's say you have a $30,000 account. You should come in with the mentality of not thinking of how the first couple of trades are going to go. You should come in with the mentality of following the program 100%. And the only way you can do that if you focus on the results based off a sequence of trades. So, I mean, you can sign up with a 30 market moves coach and your first trade can go totally to shit and your second trade can go totally to shit, okay? And so at that point, you're like, well, Leo, I just put 3K in this trade and put another 3K in this trade, and look, in the next trade, no, Leo, I can't do that. I can't lose another 3,000. I'm just going to put $300 in that trade. So let's say first trade is a loss 100%, second trade is a loss 100%, third trade is a 20x trade. But at that point, what happened? Your confidence level has been damaged so much that now, after two losses of $3,000, okay, after the sequence of two trades, by the time it comes to take the third trade, okay, you can't locate your balls and you only put 300 in that trade. And that's the trade that goes 20x. So what did you make? Okay, so on your third trade, you made $6,000, okay, because you only put $300 in it. Well, that's how much you lost on the first two trades. So you're breaking even. Well, what if you continued with the strategy of allocating $3,000 to the trade? So on your third trade, okay, you would have made $60,000, all right? Or the outcome would be you would have gone from $3,000 to $60,000. You would have made $57,000. And in the first two trades, you lost $6,000. So overall, you would be positive $51,000. See, all you had to do was use the same amount on a sequence of trades. So if you're coming in with a 30K account, right? I want to focus on a sequence of trades. 10 trades, 20 trades, right? And clearly, if you hit, okay, on your third trade, you're hitting a 20x trade, then that number should be adjusted, right? So now you've allocated 9K, but you just made 51K, so that's 54K plus 21. You're basically at 75,000 now. And so you break that into a sequence of 10 trades. So now you're putting $7,500 in each trade. Okay, that's it, guys. It's that. Like, make sure, okay, that you're not in a situation. Let's say we're taking. Let's say you're trading Monday, and we're taking 3 trades on Monday. Okay, you shouldn't be putting like 10K in one trade, $1,000 in another trade, and $1,500 in another trade. Like, what the fuck is that? Okay, you should put, okay, 5K in each trade. All right, so when the trade hits big, you're also collecting big. I mean, let's say you do 10,000 in one trade, 1,000 in another, and 1,500 in another. Okay, well, the $1,000 trade hits for 20x. Okay, that's 20 grand. Okay, but you're losing 11K. You're still coming out ahead 9 grand. Okay, but if you would have put 5K in each trade, I mean, that's a difference of, $80,000 in profits by the time you do similar math. I mean, just round it up, right? So that's the difference between you making 9K and 80K. By simply understanding what is your risk management strategy. Okay, I'm going to be putting an equal amount in each trade. Now, I mean, when I say an equal amount, I mean, it doesn't mean that, okay, well, it has to be exact. Well, fuck. I mean, you can put 5,500 in one and put 4,800 in another, but they're all roughly right around the same amount. They're around 5K. So what you don't want to do, I mean, this is a simple risk management tool for you to avoid, missing out on big payouts. Okay, because like even with myself, there are times where I really love a fucking trade, and I just want to, I want to put in that trade a ton more. But I know, okay, that some of my favorite trades, they're not the ones that are my top gainers. They're not my top performers. So often, like, a second trade on the list for that day would be the big hit, or the third one. But overall, in my mind, I'm thinking it's this first trade that's going to be the big home run, okay? So oftentimes, that's just, for me, the trade that I pick to be the ultimate trade of the day may not be necessarily the trade that's going to be paying out the most. See, I understand that. That's a psychological part that I understand when it applies to me trading. And this is just one example of these psychological things, right? But how do I avoid, how to maximize this situation for myself? Well, I put an equal amount in each one of these trades. 5K, 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 okay? Just because it's my favorite trade, I don't fucking go and put, I don't put 100K in that, and I put 5K in the other ones. Well, I'll just put 100K, 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 okay? So, and that strategy is going to work, because when you're going to nail a 20x trade, okay, you're collecting a lot more than the losses, let's say, on the last few trades. Okay, and now we're using an example here where you take 2 unsuccessful trades, and we're calculating like they all went to shit, right? 100% loss. Now, in reality, you could have a trade that just doesn't perform, and maybe something changes within the context of why you took the trade, and so now you may be getting out, you may be breaking even, right? So maybe trade one goes to like, okay, you don't make money, you don't lose money. Second trade, you could be down 50% on it. So, okay, so you lose maybe a few thousand there. The third trade is the one that pays. Now, at times you could be going for like 7 losing fucking trades before you nail that 20 or 30 extra. But let's do the math, okay? Let's say with a 30K account, all right, you got a sequence of trades. Notice, again, the risk management thing here is it's the sequence of trades that you're focusing on. You're not focusing, oh, well, the outcome of this trade or the next trade. You're focusing on the overall outcome of a sequence of trades. So, which is huge. Once you understand, you're not just trying to trade this one trade or the next one. If you understand that you're trying to track and focus on the overall outcome of a sequence of multiple trades, 10 plus trades, and you stick to the same rule. So you got 30K, 3K into each trade. Okay, you can put 3,100 or 2,900, but it needs to be a close amount. In other words, you can't be putting 3K here and put 500 in this other trade. So basically, out of the sequence of 10 trades, you may go. Let's say you don't. Let's say it's just everything's just going to shit. You know, everything's just horrible. Out of 10 trades, you get one. What does that mean? Okay, out of 10 trades, you get one trade that goes 20x. What does that mean? What does that fucking mean? So that means you lose $27,000, and one trades make you $60,000, so you're making $33,000. That's what that means. If you get one trade out of 10 that goes 20x, and if you start with 30K, and you risk manage the amount that you put, that you allocate. In other words, you don't allow discrepancies where one trade you're putting way too much fucking money in, and the other trade you're putting way little. Okay, if you balance out the amounts and you focus on the sequence of trades, you can go 9 trades wrong and just get one trade fucking right, and you will still make money. Okay, that's it. Okay, that's your fucking risk management. Okay, and instead of focusing on, well, Leo, what if I lose? What if I lose? Just expect, like, look, some trades will fucking lose. Okay, some people are so worried about how much they're gonna lose on the trade. Okay, if you put 3K in the trade, just consider it fucking gone. Okay, it's done. Don't even sit there like a little bitch. Oh my God, I just had 3,000 in this trade. Now it's down to 2,000. Oh my God, it keeps dropping. It's at 1,700. Leo, I can't take this shit. I'm jumping out. Fuck. And then that same trade goes to 30K by the end of the day. Like, what the fuck did you just do? You took a $1,300 loss on a trade that would have paid you $30,000 by the end of the day. Like, what the fuck? Why would you do that? So take the 3K, put it in the fucking trade, and just, guys, it's like, stop being so damn emotional. Okay, the reason 99.9% fucking traders will lose on a good trade is because they will sabotage themselves. So stop sabotaging your good trades. How many times you've jumped out of the fucking trade just to later in the day or later in the week, you're like, oh my God, oh fuck, this trade would have paid me. It would have paid me. But by that time, it's too late. You're already out of the trade. Okay, so focus on the bigger move. Okay, focus on, staying strong with your trade. I mean, focus on your entries and exits. Focus on not being fucking too damn emotional. And, if your account is 30K, you put 3K in the trade. I mean, fucking, and you lose 3K. Even if you lose it multiple times, you stay with the fucking program. The only way you will lose if, or let's say took 4 bad trades and you're like, fuck, Leo, I can't do this shit. Oh my God. So on trade 5, instead of putting 3K, what do? You put 300. And the reason I keep repeating that, I actually had a guy that fucking did it this week, and it's frustrating, right? So the guy puts $300 in the trade that fucking goes 20x. And so instead of making 60K, the guy makes 6K. Like, what the fuck is that? Stay with the program. You sign up to come and trade with a 30 Market Moves coach. Stay with the program. Okay, don't change shit. Okay, just don't. Just stay with the program 100% and you will win. It's when you start being emotionally vulnerable. Oh, but I don't see a profit yet. But, is this trade? Oh, my God, this is another trade that turns red. And just, look, some of you guys trade up. You're just not cut out for trading. That's it. You should quit. You should fucking quit. I mean, you should stop wasting your time trading. You should just go congratulate your wife right now. Honey, I listened to Leo's last message and fuck it, I'm done. I'm quitting. Okay? So, guys, why the fuck would you trade? Okay? If every time you put on a trade, you're going to be so fucking emotional. Okay? Understand that your goal is to follow a sequence of trades, okay, based off a certain setup, based off a certain sequence, based on, trying to nail your entries, especially now when the market is bouncing. You short the bounces, it gives you way higher probability. That's how you nail the entries. And with that, okay, you have to worry about a lot less paying attention to the conventional type of risk management. Because if you focus on the right shit, okay, you will never have to quit trading because you will be fucking making a ton of money trading. If you focus on the right shit and you don't change it. But yet, a trader trades a certain ticker, the trade goes unsuccessful, he loses some money on it, and what does he say? Oh no, I'll never trade this fucking ticker again. I'm done. I'm never touching that son of a gun again. Okay, and yet the next day the shit reverses and it drops 280 points. Sounds familiar? Oh, yes, I'm talking about SMCI not so long ago, right? It goes to 1080 and then in one day it's a fucking 75x trade. And that's the day you said, fuck it, I'm never trading SMCI again. On a day it pays you 75x? Why would you fucking do that? So stay with the program 100%. And that's how you beat the market. See, there is 0% probability of you beating the market if you're going to be a market's bitch. Meaning you're going to be changing your mind every time depending on how you trade and when today. You're going to change the way you're going to trade tomorrow. And that's how traders get fucked. Okay? You got a program, fucking follow it. 100%. Focus on the sequences of trades, not on one or two trades that get you all fucking emotional because you had a loss on them today. Okay? Make sure you don't, your level of confidence should not be shaken up just because you took a loss today. It should not be shaken up. You put the same amount in a fucking trade tomorrow. Okay? Not 10 times less. Okay? Clearly, you should be putting more in a trade, okay, based off your calculations. So, I mean, a totally different message on that. Maybe I'll record over the weekend. But guys, there are moments, okay, where you should be putting a lot more in a fucking trade. So far we've been talking about risk management and how, you should try not to diminish the amount greatly that goes into one trade in relation to the other trades you're taking. But there are absolute moments, okay, where you have to go for the kill, and in those moments you have to up the amount that you're putting in trades significantly, okay? Because there's going to be moments, let's say you're trading for 2 weeks and you're watching the market carefully day and night, and there's going to be a moment there, right, just like the moment I just described on SMCI, where you know for a fact it's a motherfucking top of all fucking tops. And that is the moment that other trading participants, they cannot distinguish that, okay? But you can. There's moments, okay, if you're so glued to trading, there's moments that you just know based off putting, like, I just know because it's a part of the intuition, because after putting fucking hundreds of thousands of trades in the last 18 years, I just know that I know when a top is a fucking top, and that's it, and I fucking go for it. And then, and those moments is where, you have to just leave all the fucking risk management bullshit out, and you just have to go with a much bigger, heavier fucking position. It's when the probability of a 75x payout are substantially higher than the probability of a normal payout that we target here, like a 5x or a 10x. That's when you fucking go and you put a ton of money. You put a ton of money on the trade because there's certain moments in the market. If you're there, if you live and breathe the markets every day, there's going to be moments that are going to be 100% self-evident. This is the fucking moment. And boom, that's the moment you go and you bet big. So there was a video, there was a podcast on that yesterday, on Friday, talking about how could you not short the markets at all-time highs? If the market gets to all-time highs for all the wrong reasons, that gives you the right reason to short it. Okay, so if you haven't reviewed that message, you should. Because there's just going to be moments in the market that is just, this is it. It's fucking here, and you got to go big. So, anyway, guys, some of these risk management things, they come from placing a ton of trades over a ton of years. And if you're new, the best way to learn how to avoid a lot of these mistakes is to trade with a 13 market moves coach. Okay, so if you want to save a lot of years off the learning curves, you come to 13 market moves. You take all the courses, you study all the curriculum, you sign up to trade with a coach. Okay, so you really would understand, and actually not just understand. You have to understand it first, but a lot of the understanding will come from taking a sequence of trades, not one trade. I mean, you shouldn't be signing up to trade with a 13 market moves coach because, well, I'm just going to, oh, look, I've seen Leo taking all these crazy trades. I'm just going to go and sign up and just take one trade with him. You know, like, fuck, don't even bother. Like, why would you do that? Like, everything I just explained to you in this audio message is like you should be focusing on a sequence of trade. Sequence. It's a sequence that gets you paid. Okay, not one trade. You could be missing a few trades before you get a solid trade that pays you. But you have to take other trades, and you have to expect that some trades will go to shit. It doesn't matter how perfect you are. There's going to be a perfect setup, and the trade could still go to shit. So it is the sequence of taking action on a setup that is a profitable setup that ultimately will pay out. And within that, you know, you cannot get emotional in the process of getting that done. So you want to get it done, do it with 13 market moves, okay? Save a lot of time and money. Stop doing stupid shit like buying 30 positions. That's a simple fact that tells you don't know what the fuck you're doing. They told you to diversify, so you go buy 30 fucking positions. And then you're clueless. Well, was that a good entry or was that not a good entry? When should you act? You don't have a clue. 30 positions is just too much. It's ridiculous, guys. The way you risk manage is you focus on 2 fucking positions. 2 positions, that's all you need. Maybe 3. That's it. And you focus on perfect entries or as perfect as you can get them. Okay? And you focus on adding positions in certain time frames. You focus on decreasing your positions at certain time frames. Okay? You focus on following the market move, the way it's developing, that helps you understand when are those time frames when you should be taking certain action. You should be paying attention to the volume on the chart. You should be paying to the catalyst and the reactions of the market to certain economic data that's coming out. Okay, you should be doing a whole lot of things, but if you got 30 positions, okay, that's a sure way to get fucked. You will never make any money with 30 fucking positions on a $30,000 account. So if you're tired of your account not going anywhere, if you're tired of using this bullshit 6-7% stop loss rule that, again, gets your account fucking nowhere. As a matter of fact, it costs you. It costs you because you end up losing colossal trades that would have paid you 10x, 20x, but guess what? You're already out of the trade with a 7% loss. How's that a fucking risk management strategy? You're losing 7% on a trade that's supposed to pay you 2,000%. Like, if you don't see anything wrong with that, then I guess continue doing whatever the fuck you're doing. But if you really want to fucking take your account to a whole nother level, don't waste any more time. You go to 13mmtv.com. Okay, hey, guys, we got a special deal. Okay, this is what I'm gonna do. I'm only do it one time, so you either do it or not. Okay, if you've listened to this message this far, I think you should you deserve a cookie. Okay, so the cookie is, you call 13 Market Moves in the next 24 hours. You can get any course for $4.99. That's it. You got to pay with crypto though. So get in touch with 13 Market Moves right now. You can go literally on the website. You know, our courses sell for $2,500, $3,000. I'm only going to keep this offer open for 24 hours. 24 hours. That's it. So you can study these courses. I mean, it's not like a 1 hour course. Most of our courses are like 6-7 hours long. Okay, and there's like, I don't know, there's probably 6 or 7 of them. So guys, you get an insane fucking deal for just staying this far into this message, because that tells me if you listen to this message this far, guys, you're serious about doing something with your trading. Finally, you're serious about doing something. And I'm telling you, a 6-7 hour course, okay, will give you an edge. It will give you an edge of understanding, okay, what are the levels, okay, what are the bear divergence, what are some of the things, what is the 13 Market Move sequence, and how to use it in your trading, guys. If you're ready to make a difference in your trading account, you got 24 hours, guys, because I want you to study the shit out of these courses. I want you to be ready for Monday. So, crazy fucking offer. As you know, we've never done an offer in courses. I've done some promotions where you guys like, hey, triple your account, or you get a $3,000 course for free. By the way, huge success stories on a few of you guys that signed up for that offer. Congratulations. But guys, this is the kind of offer I've never made. So you got a million reasons to get in touch with us in the next 24 hours. And one of the biggest reasons is to change the outcome of your trading career. I don't care if you've been doing this for 10, 20, 30 years, okay? If you're not catching 20x trades in this kind of market environment, there's something that is missing. And I promise you, 13 Market Moves will help you find that missing link. So give us a call now. Trade like a rock star 2024. Trade fearlessly with a 13 Market Moves coach. Visit 13mmtv.com, click the big orange button. Let's roll.